Hi everyone, welcome to Crypto Clarified, investing in the truth. In this podcast series, we'll be digging into the truth behind today's cryptocurrency headlines. My name's Jason Guthrie, Head of Digital Assets at Wisdom Tree, and I'm joined by my co-host Camila Russo, founder and editor of The Defiant. Hi everybody, and welcome to another episode of Crypto Clarified, investing in the truth. This is a podcast series where myself, Jason Guthrie, and my co-host Camila Russo, founder of The Defiant Media, come together each month to discuss some of the most captivating headlines and the trends that we're seeing in the crypto investment space. Today's episode will be touching on some of the sort of major talking points of the year so far. Jack Dorsey and his commenting on Web 3.0, rising interest rates and some changing macroeconomic environment and sort of what this means for the investment space. So sort of really interesting stuff we hope to get into the weeds on. So Camila, hi, Happy New Year.
Hey, Jason. Happy New Year. Great to be back here.
It is good to be back indeed. So, I mean, a couple of interesting things have happened in the, very short period since we're back this year, but markets themselves are looking a little, they're not so much down or faltering, but moving very flatly, sort of as they have been for the last kind of couple of months. Have you got a particular read on what you think's happening, what the sentiment feels like at the moment?
Well, for crypto, it's been more than flat is definitely an understatement. Like, it's been certainly choppy. Um, yeah, it does feel like more and more people are considering the bull run of 2021, 2020 might be coming to an end. And I think, obviously the major macro change going on is the Fed considering a more hawkish monetary stance, rising rates, contracting, just like monetary policy after like just record stimulus, trillions of dollars pumped into the U.S. economy. So to me, like it seems like, yes, like of course, like crypto is a risk asset. So when there's when there's less money flushing around and policy gets more restrictive, risk assets take a hit. And crypto is known to be um, less correlated or not correlated with most asset classes, but in these times, correlation like really spikes with other risk assets like stocks. So when the Fed says it might raise rates, crypto will fall together with equities and and riskier assets. So that's what's going on.
It's an interesting, I guess, moment in the short history of crypto because it's never existed during a non-zero interest rate, non-QE environment. That's the macro environment in which it was born into. It was part of the macro environment that kind of created the innovation. Bank bailouts is sort of directly referenced in the Genesis block for Bitcoin. Like, this is the macro environment that it came from. So it's sort of interesting to see what's going to happen, how it's going to perform, how it's going to affect the sentiment of people that are investing in it. But I think that uncertainty breeds, well, at least, decreases the risk appetite, right? If people don't know how things are going to behave, this is going to affect how they want to invest. And I think that's, you're right to point out that correlations are going up, because I think that's the case for a lot of assets, but quite acutely so for crypto.
Yeah. I think this kind of contradicts the overall narrative for, especially for Bitcoiners, that that Bitcoin is this hard money kind of digital gold asset that's a hedge against like traditional finance and so on. Because in the end, like when things start to get rough, Bitcoin will behave just like what people in like crypto Twitter will call boomer coins. Like Bitcoin becomes another boomer coin, which is, it's pretty ironic. But yeah, it's it makes sense, for investors. crypto is more volatile, it is risky. So when there's uncertainty, when there's um, less kind of easy money, then crypto will take a hit. I think, though, while that's kind of the short term the reaction, it's also important to uh, analyze kind of the context that we're in. Like the Fed is taking these measures because inflation is rising amid a really kind of overheated jobs market, amid a very kind of strong US economy. So, it's like it's kind of bad news, quote unquote, for the crypto market, but within like just like a very strong environment. So I think, okay, like this might be the short term reaction, but when things kind of settle and the market prices in this new rate environment, I think crypto should kind of regain its strength more based on the activity that's happening, the adoption that's happening, and be less driven by kind of the macro movements of like U.S. Monetary policy.
Yeah, I think it's important to separate out that different people are going to be trading, buying, selling, holding, investing, whatever it might be for different reasons at different points in time. And a lot of people that came in for, the fixed money, this is a hedge against quantitative easing, this is a hedge against, perpetual zero interest rates. These are guys are going to be compelled to sell the second we start hearing about rate rises by the Fed. But it's by no means like representative of 100% of people that have invested in Bitcoin or any other crypto, right? It's a nuanced space. I mean, I'll say that I'm on record as, very strongly believing that cryptocurrency has got value, not just when there's quantitative easing, money printing, interest rates of zero, that I think that this is a beneficial technology for a lot of people around the world for a bunch of different reasons. And I think we can kind of see that happening in different parts of the world as well. Like, it's important to remember that what's happening in the US or what the Fed's doing or what the ECB doing is not everything, right? Those two markets represent 700-800 million people in the world versus the 8 billion that are out there. And this is a pretty globalized phenomenon now, cryptocurrencies, blockchain, and the changes that it's bringing. So I think different countries are going to act in different ways, and different people are going to continue to use it for different reasons. I think we've definitely got some selling pressure here from the people that came to it for a very specific set of reasons linked to the Fed. But there's a lot of people out there doing a lot of things with this for different reasons. So we're going to cycle through it, I think.
Yeah, no, totally agree. Especially now, I think maybe before in kind of the previous bull run, things were different. Like it was mostly, Bitcoin. Like Ethereum was certainly live, but there wasn't much to do there on Ethereum. Like it was more, just like promises and just like plans. But now it's not just plans. Like there are actual use cases and users on Ethereum and on other smart contract platforms. So I think that's a huge difference from past cycles. Like you can actually do stuff with crypto. Like it's not just about buying and selling and holding. Like there's NFTs, there's DeFi, there you can lend, you can borrow on collateral. So yeah, you can kind of trade NFTs and all this stuff. So I think we're in a much more kind of different space. And yeah, and like, yeah, like we've both said, like there's there are different reasons to buy and hold crypto than this kind of like hedge against like QE or like traditional finance or institutions like before.
Yeah, the frontier of innovation, right, has moved out a lot. It's now about those
Yeah.
use cases that you're talking about, but that also means in the wake behind that ever advancing innovation, I think there's increased sort of stability and trust in what's already sort of sitting there, right? So people that are happy to hold this for a long term, the number of users is going up. I mean, observed it in Turkey recently. All the data that comes out says that demand for Bitcoin in Turkey is super robust, despite a recent ban by the government and a very public collapse of one of the exchanges. Those are two data points that would have completely rocked demand in the past if we go back 2, 3, 4 years. And now it just continues to grow, and for the reasons that that government is not exactly stable and their monetary policy is not exactly in the best interest of the people. And so that's why people come to this ecosystem, and I think that's only growing. And so those sort of rationales for parts of the world are really bedded in as the continued sort of innovation sort of pushes us forward into more and more sophisticated use cases.
Yeah, you're right. I think we're at this point where I think you'll find it very hard to argue that crypto is not here to stay. Like, I think people like there's just this broad understanding that this is a new asset class, and it's not going anywhere. And I think we've just kind of crossed that bridge. I think that was put in doubt a lot more recently. Maybe, I don't know, like a year ago, like even that was still in doubt. But after just like this huge boom recently, and boom in kind of like use cases, but also in investment and adoption. Like, so many asset managers have come out and said that they're now holding Bitcoin, and big banks are all offering some kind of crypto or Bitcoin product to their clients. So it's kind of like already ingrained in investors' portfolios and in like in people's minds. I think it's like, okay, it's here, it's real.
No, definitely. I think it's established. I think it's always changing. People always want to make comparisons to previous cycles or previous bull markets that we've had, but the analogy will only ever go so far, right? I believe in this sort of stuff. History rhymes, it doesn't repeat, and it looks very different now than what it did previously, just how well established it is and what's going on. But that different environment is going to lead to sort of a different path forward from here, right? Rising interest rate environment is likely to affect the market more than just the short-term investor sentiment. I think there's probably going to be an impact on the way financing works for the space. If interest rates do rise in the US, is it harder for startups to get debt? What's the VC appetite continue to look like? What's bank financing? These things will affect it. What's the relative appeal of sort of the staking if you can start to actually generate yield in the traditional system? So we're going to see areas that get tested, which I think is actually going to drive, further iterations and innovation within the space itself. So it'll be interesting to see kind of how it develops and responds and what resonates with people as, these business models do start to go more mainstream.
That's interesting. So, do you think if rates rise and startups are finding harder to fundraise with VCs and maybe traditional means, do you think crypto becomes a more attractive alternative to fundraising in this kind of like crowdsourced way?
Potentially. I mean, VC money's been sort of very free flowing. The idea that a lot of people have got a lot of cash stockpiled over the last sort of 5, 7 years, that's been very kind of well publicized. And the idea that this is looking for a home and this is a high growth area, that's sort of been a match that made sense. Now, if people are suddenly not as willing to invest in a VC fund that in turn goes invests in these projects, or if people are doing this on debt, it may become a little bit harder. What becomes an attractive asset class is going to be interesting to see. I think about opportunity cost in a lot of this case, but the growth potential for a lot of these projects, I think, outstrips a lot of it. So I do expect that to continue to be robust. It's always going to be very hard to strip out what's in a high growth environment in terms of the number of people that are coming to crypto to invest in it. We're still in a high growth stage, and we're at 1 or 2% global adoption is sort of the number that gets thrown around depending on which source you want to take, and that's still got a long way to go and is moving very, very quickly. So that growth rate in terms of money flowing in versus like what it would have been with a slightly different interest rate, I think it's always going to be hard to strip those two things out. But I do think for what will be interesting to watch, and it's way too early to observe anything yet, but the pace of development of projects, the number of new projects that come to market, the number of projects that actually get funded, whether that picks up or slows down in this environment, I think is going to be very interesting to watch.
Yeah, for sure. And then the other aspect you mentioned, the fact that rising rates might make it less attractive to deploy money in DeFi, for example. I mean, I think that might be the case, but I think still kind of the difference in rates that you get in DeFi and just traditional banks is still kind of like that spread is still wide enough that
Absolutely.
it's attractive. But yeah, it does kind of when you adjust for risk, maybe
the sort of risk return parity is
mm,
going to be interesting. And if it's no longer zero, does it need to find a home? But I think the flip side of that is that if sort of the crypto pricing holds in a more stable pattern, people are going to start exploring options for what they can do with their crypto holdings more actively. I think there's still a large part of people that have come to crypto in the last 12, 18, 24 months. And it was very much about price movement. A lot of people looking at that very closely, a lot of people sort of trading relatively frequently, rebalancing portfolios or looking to profit off volatility, etc. But if the onus to do that goes away because we're trading more sideways, more in a range for an extended period, then the opportunity cost of spending that time having a look at what the options are, like staking it or lending it or participating in various DeFi pools, potentially goes up in their mind as well. So there's also a chance that this sort of potentially, less severe price action as markets kind of work out where they stand with this new news could lead people to look more at these programs. So it's going to be interesting to see what the driver is. It's always very hard to predict exactly what the behavioral outcome is going to be from these sort of things.
Yeah, you're right. It's like last year you didn't have to do much to get an amazing return with your crypto. I mean, you just had to hold it and that's it. And like if you wanted to do more, then your returns were had to be really great. Like you just like use like unless you got rugged on all the different yield farms, you could have staked, you could have like used a bunch of different like token rewards and like airdrops, like money was just like flowing everywhere in crypto. But if that's not the case this year and the market is either sideways or down, then things like stable coins, staking and lending and using DeFi in other ways will become more attractive. And I think yeah, you're right. It might kind of push people to learn more, to investigate what these different protocols do. I think stable coins will be kind of a great way to park value and kind of sit out the market while it's choppy and that'll push people to see what they can do with those stable coins. And the good news is that DeFi has evolved enough that there are like tons of alternatives of ways to get a yield with stables.
Yeah, I think it potentially flows beyond just, yield generation or return seeking as well. There's going to be a lot of people out there that don't feel they need to follow it as closely, and they'll look at NFTs, they'll look at, what they can do outside the space because, we said it a couple of times, and I'm sure we've said it on other podcasts, is this is here to stay. People have realized that. So, okay, the market gets a little bit boring or a little bit down or a little bit, we're trending sideways for a couple of months. People are in the space. They're not thinking about leaving it. Maybe they've pared back some exposure or maybe they've rebalanced their portfolio, but they're not leaving. So hopefully they spend some time going deeper into what this can do. And that will sort of be the process by which we get critical mass around some of these projects, start seeing more established business models, and we can continue this sort of iterative process toward an ecosystem that I think all of us that are working in this space are kind of pushing towards something that is more democratic, more accessible, actually has better outcomes for the users.
Yeah, exactly.
Yeah, absolutely. So, I mean, talking about these sort of concepts of decentralization and new systems, Web3 has probably been one of kind of the biggest talking points. Well, it was happening last year as well, but definitely in January so far. And a lot of that has been spurred by Jack Dorsey and some of the comments that he's had and Twitter spats that he's starting over his sort of interpretation of Web3. And Web3 has been hailed as sort of this big coming of a decentralized world where everyone's got partial ownership of the internet as opposed to big centralized shops like Facebook. But Jack's basically said, well, I'll read out the tweet. You don't own Web3. VC and their LPs do. It will never escape their incentives. It's ultimately a centralized entity with a different label. Know what you're getting into. And it's an interesting take. I mean, he's really challenging this notion of Web3 being read, write, own, right? It just continues to be read, write with a different configuration.
Yeah. Well, I don't know. I think this is very disingenuous. Like, it's so strange. Like, Jack Dorsey is in this position where he really kind of gets crypto, and like he's a big Bitcoin maximalist, and he's in a position to really take crypto to the mainstream. But he just like refuses to see anything beyond Bitcoin. And I think it's, I don't know, I think it's very short-sighted. To me, I mean, what he's saying has, I see his point that it's true that VCs do own a lot of a big percentage of some of the projects in Web3. They've invested in a lot of the tokens of the major protocols, but that doesn't mean that VCs own Web3. I think there's a big difference between the former Web 2 model, where it's a closed system, and venture capital is this private market where only a few select can participate, and deals are done in closed rooms, and then big VCs scoop up big chunks of equity in the best companies before anyone has a chance to do that. And then maybe 10 years later, these companies, the Googles and Facebooks and big companies like shaping the world, IPO, and just then the public has a chance to participate at a much higher price than what the VCs initially got in when these companies were just startups. And then these companies go on to grow in a closed environment, and users are there in just like this, like very very separate from actual owners of these platforms. That is a fundamentally different model from Web3. I mean, right now, sure, like VCs participate in these rounds. They own percentages of ownership of both equity and tokens. But everyone else has an equal opportunity to participate and own these protocols from the start, from the beginning. Anyone can participate in token sales. People can buy tokens in the open market. Users are owners of the protocols themselves, because users are often airdropped tokens of the protocol that they're using. They have the power of participating in governance, and all these applications and blockchains are being built in the open. So not only can people just like have ownership via the token, but you can also kind of build on top of these protocols. You can fork them if you don't like how it's working. So I think just to equate the two is just not, it's just not right. Like I think it's like fundamentally different. And at least I think the point is that at least everyone does have the opportunity to get ownership very early on, while that's definitely not the case in Web 2.
Yeah, I think, well, there's a valid point around the ability to get ownership early, the fact that these are out there, and the concept of sort of democratizing early stage investment is very interesting. And I think going to be a very powerful outcome of blockchain and tokenization. And so it shouldn't be dismissed out of hand. There is something valid in, I think, at least in the utopian view of what Web3 could be, that a lot of people want to propagate. And it's maybe one of the problems with kind of labeling something before it's been developed, right? We're going to develop
Mm,
into this big thing, because the reality is that someone, a small group of people, control a given protocol. And whilst it has come into formation in a different way, open source software is a big part of that. And I think a really important one and a good improvement. I'm a big believer in open source software. But there will be small groups of people that are controlling a project, a community, a protocol, which is feeling awfully like a company by another name, right?
mm,
Which does have a relatively large controlling stake by these VCs. So that's not without a valid point. Now, that's not to
mm.
say that it's not a more, say, decentralized, egalitarian system than what we classify Web 2 as. But there's probably a shortfall between that and the utopian worldview of what Web 3 could be that a lot of people want to paint, right?
Yeah, 100%. I think, um, there's being like understanding that this is different, but also understanding that this is not like perfect either. I think it if you look at the like percentage ownership of like different protocols, Messari has a great chart for this, where they compare the ownership structures of like Ethereum, Binance, Polkadot, Cardano, Solana, and they calculate how much of token ownership is from in the public, in insiders. Insiders include VCs, foundations, and more, and like a community allocation. And you see, like, let me see, like protocols like Solana are like 48% owned by insiders, for example. Polkadot is a third. um, uh, what else? Well, Ethereum is like one of the most decentralized. um, Ethereum is only 15% owned by insiders. So you have like different degrees of centralization, and different
Mm-hmm.
compositions of ownership between the different protocols, and the different applications on top of those protocols. So that's another thing. It's like, yes, some blockchains and some applications might be very much controlled by VCs, but that's not the case for every single thing on Web3. I think there's maybe like a scale of centralization within the space, but um, yeah, I think to me, like the important thing is that um, it's structured so it doesn't have to be that way, and so people like others have the opportunity to participate early on. But of course, like it is, I mean, um, venture capital has been aggressively coming into crypto and Web3. Andreessen raised like what is it, like 4 billion, I think, or 2 billion dollar fund for crypto. Paradigm also like raised like a $2 billion fund, and like the traditional tech VCs are all getting into space. Like Kotu has been like leading a bunch of these rounds, and Tiger, like all of these huge VCs are in crypto now. So yeah, it's like it's the fastest growing industry right now. Of course, it'll attract venture capital, and um, yeah, it's naive to think that they won't have a stake in all this.
Yeah, I think there's a big, it's the problem with having an argument right in 180 characters on Twitter. It's that you lose a lot of the nuance, and this is complicated as anything else out there. But I think we're still a long way from this sort of reaching its end state. So I'm not necessarily on board with sort of criticizing stuff on its intermediate steps as we try to find the business models that work, as we try to find the things that will attract users and bring things in. And I think a lot of people have got to work very hard, and those efforts are going to need to be funded in some way in order for us to get to where we are, to where it needs to be. I mean, there's an obvious evolution of the technology happening, but there's scalability issues with decentralized applications, like its pace compared to what you can do for something centralized. It's always going to be quicker to call an AWS server than query the blockchain, at least as things stand at the moment. And there's definitely a usability issue that's yet to be solved. And so the idea that this comes into life in this complete decentralized utopia is, I think, a little bit naive. But that's not to say that the criticism's not valid. Like, if people aren't calling up shortfalls or points of control or too much centralization here, or code isn't good enough there, we're very reliant on people kind of calling these things out, I think, for this space to evolve organically. So whilst I can see the lack of nuance in the argument, it's not an invalid point from my perspective, and probably something that does need to be called out to make sure it doesn't go unnoticed, that this doesn't become a problem that only rears its head in 10 years when everybody's using this thing.
Yeah, no, for sure. I think, yeah, there could have been more nuance, because I don't think it's true that, like, you don't own Web3. I don't think that's the right way to put it. But I think that the right criticism to make is that Web3 right now isn't entirely decentralized, and that venture capital owns a large stake in many of these projects, um, and uh, that matters because governance right now, the way it works, it's set up to be very, like, plutocratic. It's one token, one vote. It's not one person, one vote. So that means those who have the biggest stake in these protocols will have the biggest say on how they're run. So when A16C owns all of DeFi, it's basically A16C calling the shots on, kind of, although they're not very active in governance, but they could, like, just like run the entire place. So of course that's not very healthy.
Yeah, for sure. If it's too centralized in one person, that's going to be a problem. I think there's also questions around what ownership means in DeFi and Web3, because I don't think it is particularly well defined. It's not very well tested yet. Owning a governance token entitles you to what exactly? And whilst it's a vote on some protocol things, you don't have direct control of the keys. Who's accountable if those votes aren't followed? Like, the concept of accountability is something I think needs a lot of exploration. I mean, and this is something that in, say, traditional company structures in the equities world has been very well tested through courts, through legislation, these sorts of processes, and they're not yet that present, or it's not present yet at all in crypto and DeFi. So this concept of ownership, of how these governance tokens are going to bite, and what the how accountability is going to be enforced, I think this is something that needs a lot of work too, if it is going to move to a properly decentralized sort of approach.
Yeah, 100%. Like, this is so early. Like, governance tokens only started taking off, like, last year. So and DAOs, like, all the tooling around DAOs, like, that's also, like, maybe a year old. So I mean, we're just, like, getting started in seeing how these experiments play out. And I think to think that, yeah, like, that we've come to the end state of this, like, a year after, like, this started being implemented, of course, like, we're nowhere near that end state. But yeah, it's fascinating seeing how, like, the evolution and how it plays out.
No, it's definitely very interesting. I mean, it's not one that's going to go away, but how it evolves from here, I think, is going to be super interesting.
Yeah.
All right, cool. I think, moving on from that one, the very last one, the big kind of topic, I think, that the event that happened in the market this week was the ETH burn rate. I know that you guys at the Define have been super active in commenting on this. So do you want to maybe just talk a little bit about, like, what we've just seen and the impact?
Yeah, I think this is going to be a topic to watch for this year. seeing that uh, we're expecting the Ethereum merge. So Ethereum, like the proof of stake chain, is expected to merge with the application layer for Ethereum. So Ethereum will become fully proof of stake. And with EIP 1559 implemented last year, that means that Ethereum's whole kind of monetary structure is changing. And this week, kind of the milestone that the network reached was that for the first time, it was the first deflationary week for Ethereum,
Mm-hmm.
which means that more ETH was burned than what was created. Um, and just like to recap a bit on EAP 1559, so what happens with that change is that um, when there's when there's Ethereum being used to pay for activity for computation in the network, part of those fees are burned. So the more activity there is on the Ethereum network, the more ETH um, gets burned. And so when there's enough activity to counteract the ETH that is issued by the network, then like the net amount of ETH issued goes negative. And so that happened for the first time um, in these past 7 days between Jan 11 and Jan 18. Um, and so we have here that the net weekly issuance offset was of almost 20 million dollars in ETH was burned. And since EIP 1559 was implemented, nearly 5 billion of ETH has been destroyed in the last 6 months. So that really kind of puts pressure on the ETH price. We're not seeing it in the market right now, but you would expect that with kind of less ETH supply, that should put some pressure.
Yeah, look, it's obviously quite a technical thing that's happened as part of the Ethereum improvement that went through, but this concept of it becoming deflationary, right? Actually, the supply reducing over time as opposed to sort of infinitely increasing, which is where it previously was. It's sort of
Mhm.
been a hotly watched phenomenon in the market, right? People have been looking for this as a way in which Ethereum can more sustainably hold its value through the fact that it's not just going to be created in infinitely, basically. And so,
Mhm.
yeah, you're right. We haven't seen anything in the price yet, but I think we'll need to see how it plays out over the next kind of couple of months. And if we continue to see the same phenomenon happening with actually more ETH getting burnt than is created, does this really start to put pressure on it? I mean, beyond the price as well, it's likely to affect a few other bits of the network too, right? So, like, what does this do to the gas fees associated with actually running smart contracts on it? Does it increase or decrease demand for the network? Is that going to increase your congestion? So how's it going to affect the larger ecosystem? Because this concept of a deflationary asset, I think, translates very linearly onto Bitcoin when people have been thinking about that, its comparisons to gold, etc. But
Yeah.
for Ethereum, it's a more complicated ecosystem.
Yeah. So in terms of gas, unfortunately, it doesn't mean that there will be lower gas prices. What it does is that the gas prices become more predictable with this improvement. So if before, like whenever you did a transaction, you weren't really sure if with the gas you paid your transaction was going through because like the transaction price might increase and your transaction like would fail. Right now with EIP 1559, what you get is a kind of fixed gas price for the block that you're transacting in that secures your transaction, that kind of guarantees that your transaction will go through. So it makes transacting on Ethereum more predictable. It's like you know that when you um, uh, whenever you use a network, your transaction is actually going through. Um, yeah, there's like other, of course, like other developments happening to be able to use Ethereum more cheaply, like all the layer two solutions. So this is kind of separate from that. It's like a way to make Ethereum use more predictable, and to uh, uh, mm, I think just like make the Ethereum supply, like make Ethereum less inflationary. So this was like the first step, and then with proof of stake, like I mentioned, um, ETH issuance uh, will be further reduced. I think it's like will be reduced by quite a bit. Like I think it's like a 90% reduction that's expected with proof of stake, and that's coming online in the next few months. So I think this will be, like I said, like a big story to watch this year. It'll be a huge change for the second biggest blockchain. So yeah,
I mean,
something to watch.
predictability, I think, is a big deal. I mean, that's a huge deal for people building applications on top of it, trying to work out business models. I think for people trying to model what congestion might look like or what usage might look like and backing up sort of price models from that, predictability is always a good thing for this. So I think from that perspective, it's potentially quite positive for how that ecosystem can behave. But you're right, we'll have to watch it over the next couple of months. And if we continue to see this pattern, well, we might see that start to play out in the price or in the investment thesis. But just to keep watching, I guess, at this point.
Yep. There's that. It's like Ethereum is now looking to compete with Bitcoin on the hard money aspect, because Bitcoin always had kind of the upper hand there. It's like, okay, they have this 21 million cap, while ETH would be kind of just like printed infinitely, and of course that should put a lot of pressure in the price if there's just like, you don't know how much supply that there will be going forward, and it always had higher inflation than Bitcoin. But now it's like, okay, Ethereum doesn't have a cap, but if it is deflationary and it continues to burn ETH, um, then maybe that's even better than having a cap. I mean, that's kind of like the argument that a lot of Ethereans make. And of course, there's this ultrasound money meme that was kind of big last year. It's like, okay, Bitcoin is sound money, but with this, like, Ethereum is ultrasound money. So that's, I mean,
Do you think
that
they
really
need to be in
depends.
competition? Do they need to be in competition on this point? Or can they be separate use cases, right?
Yeah, I definitely don't think that Bitcoin and Ethereum should compete. I think that's the wrong mindset. I think Bitcoin has like proven to be like the digital gold of the space. It's like the most like hardened protocol. Uh, People can rely on it, they depend on it. There's not like a bunch of implementations going through, there's not this big merge happening. It's like Bitcoin works like it's always worked, and any change that's made will be done very slowly, and there's this 21 million cap, and that's it, and it's just like it works very simply and very kind of beautifully. um, and then Ethereum is like the application blockchain. It's like the more flexible blockchain. It changes with time. It modifies itself and grows depending on what the community wants and what developers want. It's like the developers blockchains who build decentralized apps on top of, like, it's not made to be digital gold, but
I
Ethereum
think this
still like to compete with Bitcoin, but I
I
think you're
think
right.
yeah, I think the sort of fanboys for each protocol like to make a big deal out of it on Twitter, but beyond that, they really shouldn't be. They really aren't competing, and I don't think they should be. And I think this idea that the ecosystem will kind of find its maturity many years down the line, it will involve multiple blockchains and protocols and ways of doing business. And we need to kind of find the one that's going to work for the most people. And that organically happens over time. This us versus them mentality inside the crypto space can't be helpful for the kind of growth of it. But that's maybe a slightly a side point. All right. Well, with that, we've actually run over time as we kind of usually do. Apologies. We're not going to get to kind of questions today, but we'll answer the ones that have come through offline. Thank you very much for everybody that has tuned in to listen today. I hope you guys have found it useful and informative. We'll be back next month to discuss more crypto related topics. If you'd like to find out further information, please reach out to us at info@wisdomtree.com. Thanks again for listening, and hope everyone has a great day. Thanks. Bye.
Thanks, everyone.
If you'd like to learn more about cryptocurrency trends, WisdomTree hosts a wide variety of research and educational resources. Visit our website at wisdomtree.eu/crypto to stay current on the latest crypto developments.